CG Market Watch.
Hi guys, so this is JJ Andy and we have Michael here. So today we want to talk about a topic on Bitfinex, right? I think it is a repetitive topic about Bitfinex and Tether. And so let me read this news. It's a research paper. I'm reading it from the Verge article. So it says that a research was published today by the University of Texas at Austin. And the paper was co-authored by a finance professor who is known for catching fraud in financial market. And in this paper he revealed several distinct patterns in trading that suggest several people or a person at the major cryptocurrency Bitfinex has actually inflated virtual coin prices last year. So we're all aware that BTC went on a rampage last year in December in 2017, right? And so the paper actually claimed that half of the volume actually came from Tether. Okay, so and from further reading, I kind of understand that Bitfinex and Tether has the same CEO. Alright, and Bitfinex, as most of you should know already, for those who are trading longer, is actually based in Hong Kong, registered in the Caribbean. So meaning to say the US authorities can only step in when investors from the US are involved in a transaction. So that's pretty smart of them, right? I mean, it's brilliant.
It's also pretty dodgy.
Yeah, but it's of what we know, the UFTC has actually stepped in, and now that the futures on COE and CME markets are out, and therefore CFTC can now have the right to step in and control the different exchanges that are trading BTC per se, or the cryptocurrency. So, what do you have to say about this news, Mike?
I'm glad I didn't use Tether, but I can see why it's like alluring to some people.
Yeah,
because it's simple. They don't want to keep putting in cash. Then they can charge the fee. Then buy a coin. Then put it out as cash. Then withdraw it. They can charge another fee.
Yeah,
it's much easier to lock it in the profits as USDT. Then keep it there. When I see the price at a number that I like, that I buy or sell, rather than just watching satoshis. Because it's like a lot of decimals.
Yeah.
Every time I tell Andy, hey, Andy, look, it's at 0.0000563. Then he's like, oh, okay. It's better telling him like, oh, Andy's at $1. Yeah. How simple is that?
Like, okay, so Mike don't use Tether, right? I personally used to use Tether until all the news about Tether came. Hey, come on. Hey, I was making $400 a day if I could trade on Tether, come on. If I want to, okay? But I'm not trying to boast here, okay? I'm not being a Ryan here today. Oops. But but just saying, okay? But that was possible, a day, a week, that's fine. But the reason why I used Tether was because I wanted to keep my trade simple, alright? I came from forex trading background. Anything was numbers. It's so much easier than really looking at Satoshi level and you calculate what does this mean, right? It's so tough, and if it's slashed against Ethereum as a base pair, it's a totally different number again. It was so difficult, but trading in Tether means your profit is either, again, a loss in the whole number. You earn $406 today. That's it. So much simple. And from my OTC partners, from my friend, my buddy, he actually told me that in China, okay, most of them actually trade in Tether. Okay, they don't.
Allegedly, no.
Yeah, allegedly. I don't know how true is that. Okay, I'm just saying, but they love Tether. Alright, they love. Why? It's because trading is simple. One, calculation of fees are simple. It's always in a whole number. Say 5%, 2% of your fees is a whole number. It's not like Satoshi level 0.00186 BTC. It's not like that, right? It's easier. And number three, it's stable. Right? We don't see much fluctuation. So, I mean, just giving you a perspective of why I will use it as a trader, these are some of the reasons. And on top of that, it's always safe. Why? It's because if the market tanks, I got a lot of Tether as a supply. I'm only trading into Tether and odds. I could always use more Tether and buy into BTC at a low, right? That makes sense, right? So
compared to like hedging against BTC, right? So I have to first watch whether Satoshis went up, and then I need to watch whether BTC price is good. So there's like double trades.
Yeah.
So it's like
correct. So one trade, right? And you could hold on to Tether, and it becomes a good hedge at the same time. So I had that problem of weighing the pros and cons, but then I questioned myself, where did Tether came from? Like where is it created from? It was much like a printing money kind of thing. You just print a virtual currency that was created out of nowhere. And I think a few months ago, a huge supply of Tether was being created again. So I really questioned the value of Tether, and I also questioned whether the market cap increased so exponentially last year. Was it because of the pump in Tether that was created out of nowhere as well? Maybe the market cap itself is inflated. Maybe it's worth less than what it's worth.
Maybe we should all cash out and see what happens.
Yeah.
We have enough money to pay us.
We crash. But okay, so the next thing we want to talk about today on CG Market Watch, it's what do you exactly do when the market tanks right now? So what would Mike do, right?
So Ryan always says no. huh? The market crashed, buy more. So, but that works for people with money lah. What do you do if you have no money? So when he asked me to buy more, right, I have no money to put back in. So I went to Google online, and then they're like giving a bunch of suggestions on things that you can do during a market crash. So first off, they have re-looking at your portfolio.
Okay.
Actually no, I'm lying. I read my own article that I wrote like one. Okay, so re-look at your portfolio, learn how to rebalance it, cut down on all your alts, and then don't panic. Watch what the market is doing. So like if you are down like 15%, but the rest of the market is down like 50%, then actually you're doing alright.
Wow, okay.
Right, that makes sense. Yeah.
I'm kind of proud of him for saying that. I mean, coming from no trading experience, no background.
I needed ways to comfort myself when my portfolio went down. It's like, 25% down, never mind, market down 40, it's okay.
Okay, so
then there was spending time with family, trying not to stress about it. Like Andy doesn't look at his portfolio if it's going down, because I mean you can't do anything about it, right? Might as well just leave it as it is.
I mean it's bad when you are like refreshing or block follow a delta where you're driving and then you see it going down. I tell you, it's a bad experience. I did it once and I'm like,
you want to turn the wheel to the right?
It's like almost accident kind of thing. Don't do it, guys. Don't do it, especially when
So the last one was okay. Don't listen to it if you don't know how to do it, but you could potentially short.
Oh wow.
Do you want to explain more?
Okay, so
and make sure that it's like,
so we're gonna do a bit of disclaimer here first. We can only say this segment because Ryan is not around, but shorting are more for the experienced people. It means you know how to margin trade, it means you know how to leverage. It also meant you are borrowing certain BTC on certain exchanges from different lenders, so that with that collective effort, you can actually short the market. That means you sell against BTC. And then when you close your trade, you actually buy up BTC. But at the same point in time, you are only using a very small amount to gamble for a larger gain. But at the same time, you sit. Okay, so if let's say BTC volatility.
Why don't we do the unleveraged shorting first?
Okay, so
I have one Bitcoin, it's worth 10,000. I think tomorrow the market is going to hit 5,000. I sell it now. When it hits 5,000, I buy back 2 BTC for that same 10,000.
Brilliant.
That is just shorting up without any leverage.
So now with that concept, you add in the fact that you can borrow from people when you do the same exact thing. Alright, so it may seem very exciting, but trust me, I've been doing that for the last 5 years or so. I lost a lot of sleep because of that. Because you have to keep managing it. Your face has to be locked at the screen.
Forget to close, right?
Yeah. And the moment you go and watch a movie, and in like 2 hours of Jurassic Park, you look at the dinosaur, you realize, shit, my trade haven't closed. I tell you, that's the stress that you will get, really, and you cannot sleep. So there's a fundamental difference between trading really on leverage and really just investing. It's very, very different, right? I mean, look at Ryan. I don't know where is he now, but you know, his investing is not shorting. He doesn't have to check every day. Yeah.
Is it because he doesn't know how to, or is it because he, you know?
Okay, we'll get to that. We'll let him explain that, right? I don't want to jump on any conclusion. Okay, so from my point of view, there's only 2 factors you need to know when the market's not doing that well. All right. One is you need to relook into your portfolio, right? What might say. But I will add one more point to it. That is, you can still buy odds, or you can still buy certain tokens that you feel will have more potential upside when BTC appreciate together. So if you have realized the market pattern right now, alright, BTC doesn't rage anymore. It doesn't bomb. Not yet, maybe. Alright, it will eventually. Maybe last year it did. But right now, you realize that it's consolidating in a very long trend. But at the same time, you realize that odds are appreciating together when BTC does that too, right? Even in Satoshi level, you realize that, hey, certain strong odds, right, are appreciating together with BTC and even faster than BTC. So all I did was I figured out which token does that. I'm not going to say it here, but I'm just saying certain tokens does that, right? So I mainly just pick 2 or 3 that I know that they will appreciate faster as BTC starts appreciating together. And I'm making more Satoshi as it does that together. Alright, so no, Tether. Nah. So I no longer really trade Tether nowadays, to be honest. Okay. Now the second thing I can really share here is this. Now, whatever that you lack in numbers, you have to compensate it with skills. You have to compensate it with tries, right? With repetition. Why? Because if you're bad at trading, you have to keep trying until you get good at it, right? Or it's like paying school fees kind of thing. But the logic here is this. Now, when the market is tanking, when it's so bad, the only 2 things you can do is read and practice. Read and practice. Keep trying, right? Keep thinking, why is it not like that? Why is it working? Okay, what if I put an imaginary trade? I write it down on a book, on a paper, and I say, what if I buy at this particular price? Will it do good for me in the next few days? So you can actually track whether your trade is making profit as well. So you just keep practicing, alright? But this is one last phrase that we want to leave to all of you guys is this, alright? This is what my mentor once said to me. Okay, you gotta, he said, Andy, you gotta be patient with your growth, but you gotta be impatient with your learning. Okay, like it's sinking, right? Let me repeat myself. So he said, you gotta be patient with your growth, be it in your account, be it in your intellect, be it in your skills, but you gotta be impatient with your learning. You gotta be aggressive and hungry for knowledge. You gotta be hungry, aggressive for skills, technical analysis, fundamental analysis, understanding how the blockchain businesses work. That is why you should be hungry when the market is not doing well. When the market is doing well, you ride up, and all you need to figure out is when to take profit. It's a simple thing to understand. To me, is it simple? Was it simple?
Okay lah, you made it more complicated than it was lah.
Okay, thanks. So, thank you guys for tuning in to CG Market Watch. We'll catch you very soon next week. Alright, so take care guys. See you next episode.
You just said next gen.
Did I say next gen?